It's the end of the year, and the end of the year seems to make the market kind of stupid. So let's do a stupid idea of the day. Okay, Apple. IDC, which is a big technology market organization, they track market share, came out and said, well, the tablet market is growing really, really, really fast. In fact, we're looking at about a double in the size of the tablet market between now and 2016. Apple, on the other hand, is actually going to lose share in the market. So if you looked at this and you said, well, what did the market glom onto? They decided that they would focus on Apple losing share. So Apple dropped about $27 on the day this came out, which was December 5th. That's about 4.5%. Okay, but if you take a step back and decide not to be simply stupid, and I don't think that it's IDC that's being stupid, I think it's the reaction of the market to that announcement. Let's look at some numbers. Okay, I'm going to do this. Right now, it looks like, according to IDC, that the tablet market is on track to sell 122 million tablet units in 2012. And if you figure that using Apple's current market share, or maybe even the 2011 when it was a little higher, that means that Apple will do about 70 million tablet units in 2012. Okay. If then the market grows the way that IDC says, so that you get a 50% increase in the number of tablets being sold, so that basically the market grows from its current 122, oh God, this is even more than 50%. They're predicting that the market will grow to about 283 million units by 2016. So that you're looking at an increase from 122 million to 283. Apple now, remember, is losing market share. How much are they losing? Well, they're going to go from owning about 54% of the market, are you ready for this, to the horrendously low level of 49.6% of the market. So they're going to go from owning a little more than 50% of a market that's producing 122 units to a little less than 50% of a market with 282 units. Apple's share in terms of units under this scenario goes from about 70 million in 2012 to about 141 million in 2016. It essentially doubles over the course of 4 years. Now, you can say, well, the market is really reacting to lowered expectations. Well, Apple already trades at a PE of only about 12.4. It's about a PE that's 80% of the PE for the average S&P stock. So this is not an overvalued stock. So I don't think you can really make the argument that expectations are what's pushing the stock down. I think it's a knee-jerk reaction to people who don't understand that 50% of a pie that's 2 times larger is worth a little more than 50% of a pie that's 2 times smaller. The story here is that Apple is going to hold on to about 50% of the market. It will indeed show some decline in its market share, but you're still looking at a very, very large growth in the market as a whole, and very, very good story for Apple. Certainly not a reason, I would think, that Apple should drop by $25 a share. This is Jim Jubak for Jubak Asset Management.